Hey guys, Britt here. Welcome to End Times Bible Prophecy. Make sure to hit the subscribe, like, and share buttons. Well, is the United States about to get hit with a financial weapon of mass destruction? Now, in our last video, we talked about this historic meeting between Chinese President Xi Jinping and Russian President Vladimir Putin, and how upon leaving, the Chinese president turned and made this comment about we're driving the type of change that only happens every 100 years. And Putin said, I agree. And that was put on public display. It was intended to go out to the media outlets in the Western world to let them know what was coming. And we said, well, what does this mean? What are they talking about? Well, they're talking about the shift in economic and military power away from the United States and toward China, Russia, and their allies. They're talking about breaking the United States' economic stranglehold on the world through the US dollar, through the SWIFT system, through this financial system, this Western fiat financial system that's been in place for really the current system over 50 years, but this goes all the way back to post-World War I, post-World War II with the Bretton Woods Agreement. But this is very important because we know Bible prophecy does not mention the United States as a major superpower in the end times, and there's many speculations on why that is. I think the rapture will play a major role in that, but we're already seeing the United States crumble and begin to fall apart economically, politically, and militarily. And this is one reason why. So we talked about in that video, when will all this happen? How quickly will this happen? How soon could this happen? And I want to turn your attention to this video right here. Now, some of you have seen this. And of course, when I looked this up, because this happened around the end of March, this was the Kenyan president talking about how his country would be able to purchase oil from the United Arab Emirates and from Saudi Arabia using Kenyan shillings rather than US dollars. So this is yet another country that is breaking free of this dollar-denominated petrodollar system that we've talked about. And so when I looked this up to try to find an article on this, everything that popped up was fact check. Let's set the record straight. There are all these conspiracy theories about what the Kenyan president said, but they didn't actually show what he said, or they didn't provide a transcript. They just told us how we didn't hear what we heard. So I figured I would find the real, actual video, and we will play it. So I'm going to mute my microphone, hit play. Hopefully this works out fine, and then we will talk about on the other side what is said. So here goes.
We just concluded last week an arrangement, a market-driven arrangement in our fuel sector that will see Kenya access all our fuel needs on a deferred 6-month credit. That will eliminate a demand of $500 million every month from this market. And therefore, for the people who work numbers, I am giving you free advice that those of you who are holding dollars, you surely might go into losses. You better do what you must do, because this market is going to be different in a couple of weeks.
So there you heard it. straight from what he said. This is $500 million per month, he said, that is not going to be used to buy oil. They're going to use Kenyan shillings. And he said, let me give you some advice. If you're in the Kenyan population and you're holding on to dollars, you need to get rid of those dollars, because you're going to experience losses in the next couple of weeks. Well, it's been probably about 3 weeks since he made those comments, so I don't know what's going on with the exchange rate over there, but this launched a lot of people saying What does this mean? Is there some sort of conspiracy? Excuse me. Still got my cough going on. Is there some sort of conspiracy that's going on? And there has been a rumor for quite some time, you can look it up, of something called Project Sandman, where over 100 plus nations have agreed that they will dump dollars on a single day when some sort of signal is made. Now, is that realistic? Is that what this is referring to? I have no idea. And I don't think so. First off, I think that to get 100 plus nations to agree to something like that and it not get out on a very public basis would be very difficult to do. But really, it's not dollars that are the problem. It's not the dumping of dollars that's going to cause issues. And this is already happening on a slower pace anyway. It's the devaluation of the dollar. It's the loss of faith and confidence, this eroding faith and confidence in the United States, its institutions, and its ability to pay back its debt. So I want to look at this article right here. This is from Markets Insider. It says the dollar's dominance as a reserve currency eroded last year at 10 times the pace seen in the past 2 decades. It says the dollar's standing as a reserve currency of choice saw a steep decline in 2022, even though its strength in international trade remains unchallenged, according to Eurizon SLJ Asset Management. In a Monday note, strategists calculated that the greenback accounted for about 2/3 of total global reserves in 2003, then 55% by 2021, and 47% last year. This 8% decline in 1 year is exceptional, equivalent to 10 times the average annual pace of erosion and the US dollar's market share in the prior years, the author said. The drop-off in the dollar's standing as a reserve currency accelerated since the start of the war in Ukraine in particular, and we've been over why, and they explain so here. It says exceptional actions, namely sanctions, taken by the U.S. and its allies against Moscow made many nations less willing to hold on to the dollar, the report said. After Russia invaded Ukraine last year, Western nations largely cut off Russia from the world financial system and froze its currency reserves, forcing the Kremlin to rely more on the yuan. Meanwhile, the euro's share as a reserve currency jumped by about 5%, bringing its standing to the same level it hit in 2003 and effectively erasing 2 decades of losses. China's yuan, meanwhile, continued to gain at its usual pace and didn't see a big spike as a global reserve currency last year. To be sure, no other currency is set up to challenge the dollar's dominance in international trade. It's still the main conduit for country-to-country transactions. Citing data from the Bank of International Settlements triennial foreign exchange surveys, the dollar commanded 85% of all currency turnover in 2010, compared to 88% market share in 2022, the note said. We believe the erosion of the dollar's reserve currency status has accelerated in recent years at an alarming pace, especially since the start of the Ukraine war, while the dollar will likely continue to enjoy dominance as an international currency for a while longer. Meanwhile, Fitch Solutions said the dollar's dominance will erode over time, but there won't be a paradigm shift given that there's no viable alternative currency for international trade. I would take exception with that. They are correct, I believe, in saying that, well, there isn't some other nation's currency that's simply going to replace the dollar tomorrow. That's not going to happen. But the problem is not with the dollar. The problem is with the United States debt and United States treasuries, which are the preferred asset, foreign reserve asset that's held. So let's put it in simple terms. So in the past, Saudi Arabia would sell oil and they would receive dollars for that oil they sold. Well, rather than hold the dollars, they would take the dollars and they would send them back to the United States in exchange for United States treasuries, United States debt that would pay them interest. And they would hold that until such time they wanted to trade it for some sort of goods and services. So that was their reserve asset. People are now losing faith in treasuries as the reserve asset on their balance sheet because they look at what happened to Russia when those assets were frozen. They effectively went to zero, so they lost all their purchasing power. They're also watching the breakneck pace at which the United States is piling up debt, and they're looking at how viable is it that they will be able to pay back this debt? How viable is it that these treasuries will retain their purchasing power? So instead of another currency, what will happen is there is another viable alternative to U.S. treasuries, and that alternative is gold. Gold retains its purchasing power. No government can simply print more of it. And we've talked in the past about how this is the Achilles heel of the United States and its Western allies. It's the Achilles heel of the entire Western financial fiat system, which is based on paper promises. It's based on faith, people's belief in that these pieces of paper have value. If that belief goes away, so does the United States military power, its ability to project that power across the globe, as well as because the United States economic might will disappear as a result. So to put things into a better perspective, I found this article right here, which I think sums it up perfectly. It's from Doug Casey's International Man. It says, Rise of the Petro-Yuan, the End of the Petrodollar's Reign, and the Impact on Global Markets by Nick Giambruno. And I'll link to this in the description below so you can read the whole thing. We're going to read a few portions of it, but I think this, again, sums up perfectly what we're seeing take place right now and exactly what Xi and Putin were discussing when they talked about change that hasn't happened in 100 years. So this says, did you know that central banks bought more gold last year than any year in the past 55 years since 1967? Well, if you've been watching this channel, you do know that because we've gone over that, and it's by a long shot. You see that 2022, they were piling into gold in a way we haven't seen since 1967. He goes on, he says, though most don't realize it, 1967 was a significant year in financial history, mainly due to the events at the London Gold Pool. The London Gold Pool was an agreement among central banks of the United States and Western European countries to stabilize the price of gold. Because again, this was under the Bretton Woods system, so the United States dollar was 40% backed by gold. It was pegged, gold price was pegged to the dollar, and other countries could exchange their dollars and convert those dollars to gold. Nixon changed all that in 1971. This is why it says the London Gold Pool, or it says the goal was to maintain the price of gold at $35 per ounce by collectively buying or selling gold as needed. However, in 1967, the London Gold Pool collapsed due to a shortage of gold and increased demand for the metal. Why? Because the United States was simply printing dollars and they didn't have the gold to back it up. They had to pay for the Vietnam War, all the Great Society programs. Government spending was out of control. Other nations noticed this and said, let's trade these pieces of paper, get our gold while we can. And eventually there wasn't enough gold backing it up. So it says, however, in 1967, the London Gold Pool collapsed due to a shortage of gold and increased demand for the metal. That's because European central banks bought massive amounts of gold as they began to doubt the U.S. government's promise to back the dollar to gold at $35 per ounce. The buying depleted the London Gold Pool's reserves and pushed the price of gold higher. In short, 1967 was the beginning of the end of the Bretton Woods international monetary system that had been in place since the end of World War II. It ultimately led to severing the US dollar's last link to gold in 1971. The dollar has been unbacked fiat confetti ever since, though the petrodollar system and coercion have propped it up. The point is, large global gold flows can be a sign that a paradigm shift in the international monetary system is imminent. And that's what we're seeing now, because we're seeing these central banks around the world buying gold at a pace we haven't seen since 1967. Central banks are the biggest players in the gold market. And now that we have just experienced the largest year for central bank gold purchases since 1967, it's clear to me something big is coming soon. And those are just the official numbers that governments report. The actual gold purchases could be much higher because governments are often opaque about their gold holdings, which they consider a crucial part of their economic security. Today, I think we are on the cusp of a radical change in the international monetary system with profound implications, yet few are aware of what is happening and its enormous significance. I suspect most people will be taken by surprise, and it won't be a pleasant one. They'll be the ones holding the bag for a failing monetary system. But it doesn't have to be a disaster for everyone. Those who get positioned properly ahead of this paradigm shift could make fortunes. So this is a financial newsletter, so that's why they're mentioning that. We're looking at it from the perspective of how does this affect world geopolitical international relations, and how does it impact Bible prophecy? This goes on. It says the real reason for China's massive gold stash. According to the Financial Times, the big buyers of gold in 2022 were China and Middle East oil producers. That's not a coincidence, as these countries will be at the center of the changes to the international monetary system. It's no secret that China has been stashing away as much gold as possible for many years. China is the world's largest producer and buyer of gold. Most of that gold finds its way into the Chinese government's treasury. Nobody knows the exact amount of gold China has, but most observers believe it's many multiples of what the government declares. Today, it's clear why China has had an insatiable demand for gold. Beijing has been waiting for the right moment to pull a rug from beneath the US dollar, and now is that moment. I believe that is correct. Goes on, it says the key to understanding it all is Chinese President Xi's recent historic visit to Saudi Arabia and other Gulf Cooperation Council states to launch, in his words, a new paradigm of all-dimensional energy cooperation. And when this happened, we talked about it. We pointed out what a big deal it was. It says the Gulf Cooperation Council includes Saudi Arabia, Kuwait, Qatar, Bahrain, Oman, and the United Arab Emirates. These countries account for more than 25% of the world's oil exports, with Saudi Arabia alone contributing around 17%. In addition, more than 25% of China's oil imports come from Saudi Arabia. China is the GCC's largest trading partner. The meetings reflect a natural and growing trade relationship between China, the world's largest oil importer, and the GCC, the world's largest oil exporters. During Xi's visit, he made the following crucial remarks. China will continue to import large quantities of crude oil from GCC countries, expand imports of liquefied natural gas, strengthen cooperation in upstream oil and gas development, engineering services, storage, transportation, and refining, and make full use of the Shanghai Petroleum and Natural Gas Exchange as a platform to carry out yuan settlement of oil and gas trade. After years of preparation, the Shanghai International Energy Exchange launched a crude oil futures contract denominated in Chinese yuan in March 2018. It's the first oil futures contract to be traded in China. The contract is based on Brent crude, the global benchmark for oil prices, and is settled in cash. Since then, any oil producer can sell its oil for something besides US dollars, in this case, the Chinese yuan. The yuan oil futures contract provides a new pricing benchmark for the global oil market, which the dollar has traditionally dominated. By trading in yuan, the contract is expected to increase the use of the Chinese currency in global trade and reduce the reliance on the US dollar. And here's the key: its significance lies in its potential to shift the balance of power in the oil market away from the United States and toward China, and to increase the use of the Chinese yuan in global trade. There's one big issue though. Most oil producers don't want to accumulate a large yuan reserve. China knows this. So again, the yuan is a piece of paper. It's a promise, just like the dollar. So we're going to get to something fundamental here in just a second. It says that's why China has explicitly linked the crude futures contract with the ability to convert yuan into physical gold without touching China's official reserves. Though gold exchanges in Shanghai, the world's largest physical gold market, or through gold exchanges in Shanghai, the world's largest physical gold market, and Hong Kong, PetroChina and Sinopec, two Chinese oil companies, provide liquidity to the yuan crude futures by being big buyers. So if any oil producer wants to sell their oil in yuan and gold indirectly, there will always be a bid. After years of growth and working out the kinks, the yuan oil future contract is now ready for prime time. Xi wouldn't promise the GCC large and consistent oil purchases if it wasn't ready. Why is China purchasing oil and gas from the GCC in yuan important? Because it undercuts the petrodollar system, which has been the bedrock of the US and international financial system since the Bretton Woods system broke down in 1971. So we've been under that international monetary system for over 50 years now. We're seeing this break down now, just as we saw those central banks buying gold in 1967 because they could see Bretton Woods coming to an end. We're seeing the central banks buy gold now because they see this petrodollar system coming to an end, and they want the certainty of knowing they have gold in their possession, because gold has no counterparty risk. It's not going to default on its contract the way a government might, the way a company might. And of course, we see that gold very well may be the very thing, the cornerstone of this new monetary system that's going to dominate world energy trade. So let's read down a little bit further, and this spells it all out, ties it up nice here at the end with this quote from Ron Paul. It says, Ron Paul once gave a speech called The End of Dollar Hegemony, where he pointed out that the one thing that would precipitate the US dollar's collapse. Here's what he said. He said, the economic law that honest exchange demands only things of real value as currency cannot be repealed. The chaos that one day will ensue from our experiment with worldwide fiat money will require a return to money of real value. We will know that day is approaching when oil-producing countries demand gold or its equivalent for their oil rather than dollars or euros. We're getting close to that day, guys. It says, here's the bottom line. The end of the petrodollar system is imminent. For over 50 years, this arrangement has allowed the U.S. government and many Americans to live way beyond their means. The United States takes this unique position for granted, but it will soon disappear. There will be a lot of extra dollars floating around suddenly looking for a home now that they're not needed to purchase oil. As a result, a lot of oil money, hundreds of billions of dollars and perhaps trillions, that would typically flow through banks in New York and US dollars and US treasuries will instead flow through Shanghai into yuan and gold. And guys, that's what's happening here. We're seeing this shift where it's not, is there going to be some sort of Project Sandman where all these countries collude and they say, we're going to dump all our dollars or dump all our treasuries on a certain day and destroy the United States. I guess that could happen, but I think it's far more likely that we're going to see what Ron Paul said right here, that the economic law that honest exchange demands only things of real value cannot be repealed. God's law that you exchange real value for real value will assert itself, and we will see oil-producing countries demanding gold or its equivalent, so yuan that can be converted into gold. But they're going to start demanding gold for oil. And without energy, because nothing moves, energy is the backbone of the global economy. The United States is at peak oil as far as the shale oil boom. So we're going to be reliant on more and more imports in the years ahead. And those oil-producing countries are going to demand gold. And when they do, we're going to see that the little pieces of paper, the dollars, begin to lose value. Now, is the dollar going to disappear? Is it going to go to zero? No, I don't think that that's going to happen. But what we're going to see is we're going to see countries dumping their treasuries and exchanging those treasuries for gold. They're going to hold gold instead of treasuries. And when they go to sell those treasuries, well, that makes the interest rates go up, which means the interest on the $31 trillion in debt the United States holds will go up, which means that people are going to lose faith and confidence that that debt can be paid back. And it's going to be this vicious cycle, and we're going to see eroding of the purchasing power of the US dollar. But, if there is a financial weapon of mass destruction, and I've long believed there is, that's going to be targeted toward the United States. We've been over this numerous times, going way back to last year. I believe this is the end game of the war in Ukraine, and the reason that entire conflict was launched by Russia to begin with was to bring us to this point. And Russia wasn't even mentioned here as an oil-producing nation. They were talking about the Middle Eastern nations, but Russia is actually the world's low-cost producer of oil. It's around $9 a barrel that they can produce oil at, which means they can be profitable at very low oil prices in a way that, say, the United States can. The United States, I think, is closer to $40 a barrel. But what if Putin came out one day and said, well, we're only going to accept gold for our oil, and we'll trade 100 barrels of oil for 1 ounce of gold. Well, today's exchange rate, that would be $20 a barrel oil. So the United States would have two choices. They could either try to suppress the price of gold, keep it low, keep it at $2,000 an ounce, and destroy their domestic oil industry and create national security issues, or they could let that price of gold rise as people around the world purchased it and used it to buy oil from Russia, driving the price up and exposing the Western fiat financial system for the Ponzi scheme it is. And I think that's ultimately where we're going is, basic math tells us you can't continue to run up trillions of dollars in debt, trillion-dollar deficits, annual deficits. This is going to be the end of the United States economic power, and by extension, the United States military power, at least the power that it projects currently and has for the past several decades. So I believe this may very well explain why we don't hear about the United States in Bible prophecy, why they are not a major player in world affairs during that time. Again, I also think the rapture will probably play a huge role in that. And who knows, they may come in tandem. We may see these things happen together. But guys, the United States, their influence is waning. We're seeing these other nations rise. We're seeing the rise of Russia, which is a major player right up until the Gog of Magog war, when the God of Abraham, Isaac, and Jacob will destroy Russia. So we're seeing the events play out the way we would expect them to play out in terms of setting the stage for the last days before the return of Jesus Christ. And so, guys, that's our hope, is that Jesus is coming back. We know that for certain. I don't know whether there's a Project Sandman and all these countries are going to collude and dump dollars. I don't know if Putin's going to come out and trade oil for gold or what's going to happen on that front. These are just my thoughts, but I do know that Jesus is coming back, and that is our great hope, guys. So keep your mind focused on him and focused on his return. Make sure you spread the good news that Jesus died on the cross for our sins so that we could be reconciled with God and have eternal life, because that's good news the whole world needs to hear. So thanks for watching this today. God willing, I will see you on Friday, and I will talk to you then. Bye. If you want to learn more about the end times and Bible prophecy, make sure to sign up for my free monthly newsletter and get your copy of my free ebook, 7 Signs of the End Times. Just follow the link in the description to get your free book. Also, make sure to check out all of my books. Just look up Britt on Amazon, Barnes & Noble, Apple iBooks, Google Books, Kobo, or anywhere books are sold. Thanks for watching today, and until next time, keep your eyes fixed on Jesus, the author and perfecter of our faith.